parameters there. In this case, for the euro, it would be 100 basis points or 1 full cent for entry and 50 cents or 50 basis points to exit after you are in. But in this case, you would be stopped out, and right now you don't really have a sense of a swing trading type opportunity. You know, it's just simply not there yet. We're still in the potential trend trading type of mode. We do have a situation here where we could potentially have gotten short again, assuming that, you know, this trend might continue. We had our little run up here. You know, we had our little 3 days up, and now we potentially could be going to the downside. We have no firm indicators here. We have the Euro index is at 0, but we have our predicted differences not usually giving us a lot of clues, and pretty much, you know, going to the sideways right now. And then the shift in the Euro index is now at 1, so that suggests it favors the upside or kind of a more bullish outlook. That would be if the market were to move above that predicted high there by a full 100 basis points or 1 cent, then you potentially would want to be in that market. But as I said before, it's a situation with what's going on and what you know, what you get influenced by the bias of the fundamentals that you would probably want to stay short, if anything at all. So, you know, whether you want those fundamentals to override your technical thinking will depend a lot on you and kind of how you look at the markets and how you want to trade and how much risk you're willing to take. Now we're going to get back over here, kind of summarize what we're talking about in our markets, and try and talk about the wrap-up of the swing trade type of a setup. Okay, let's see if I can get this in here. Okay, well, I'm not getting my closing screen here. Let me see if I have to switch into another application here. Okay. Okay, we're just trying to switch back into, there we go. Now we're ready for our summary of the swing trade setup. If you're looking at a swing trade situation, as I say right now, we do not have a lot of clear swing trade type situations, so we're talking a little bit more theory. But if we're looking for a swing trade setup, the likely conditions we want to have action reaction, where the market stays within some kind of a range, and it stays within a range gently, as I would put it, where you have price movement in both directions, so you don't get some of these wild swings and these sharp moves and the situations like you would have. It's a situation sometimes where you may not be able to use a style of trading that you like, and so you need to sit on the sidelines. If it doesn't come to you, let the market come to you. Don't try to make the market do what it doesn't want to do. Primarily what I'm talking about here with the action reaction is the short-term shifts in investor sentiment. Day-to-day news is going to have some effect. Try not to get wrapped up in that everyday noise, but what happens, the trading crowd gets a piece of news and pushes price to some extreme, and what you'd like to be able to do is when traders get a little carried away and take something to the extreme, or you'd like to just correct the crowd a little bit, kind of get them back into shape. And that's where you want to look for some kind of countering news or offset, type of thing, and it will take the prices the other way, and that's where you would like to be sitting. They may be acting on a whim, but you want to be looking at some kind of a price chart to find out where that whim has changed and what their thinking has done to change. Then when you have a swing trading setup, you obviously have to have a sufficient price range within to act, because if you don't have enough of a move, you can't get enough of you can't take enough of that move out of the full move. And I didn't say that very well, but the price range, if it's from high to low, it has to move wide enough to provide you sufficient profit opportunities within there if you're using your strategy that you're using. We're not swinging for the fences with the swing trade, but we're swinging for the, the nicer short gains that justify taking the risk. We know we're not going to get the peak, we're not going to get the bottom, but we'd like to get a big chunk out of the middle if we possibly can. Now we need to have some kind of a reliable indicator. You won't be able to guess which way the market's going by the basis of the fundamentals or any other way. You need to have some indicator that gives you a clue where those turns are going to be and when you are going to be able to take advantage of the changes in the extreme and the sentiment when it gets extended one way or the other. And you have various reliable indicators that can provide an early alert, kind of get you your ears up and ready to trade when the opportunity does come around. And as you get in, of course, you need to have some kind of logical entry exit points that has to be based upon a trading plan or strategy that you already have defined. And you need to know what kind of clues you're going to react to when you are ready to get on board. If you want to get through the maze of crazy pricing, you have to be ready to act when the price comes into those conditions that you are willing to accept. And of course, key thing that I mentioned in almost every webinar is that we have to minimize risk exposure. Whatever the indicators are, if your risk is too great, you may have to pass. Always have to keep risk as the #1 priority and assume that on every trade you enter, you will lose, and you should be prepared to take corrective action so you don't make it a big loss, because you want to, at the very most, preserve your trading stake. You don't want to be out of the market forever. Now, I don't know if there are any questions that you have. If you do have any questions, I'll be glad to try to answer any that I can regarding the strategies and things. If it's a question about Vantage Point, as I mentioned earlier, there's a number on the screen that you should call if you want more information about what Vantage Point is, what it does, get free forecasts, those types of things. That's the number that you'll see there that you should call. We have a number of webinars on in the archives, as Darrell mentioned, and we have another bunch of webinars scheduled in the future. So there may be topics that you would like to see covered. If so, just let me know, send an email or whatever to, and then or notify me some way through Trader Planet, and we can bring up any topics that might be of most interest to you. So I'm not seeing any questions, unless there are some that have come up that I haven't seen, but appears there are no questions. Either, as I say, this is not ideal swing trading time, at least in my opinion. Some people on a very short-term basis may be able to, but it's a challenging time to trade, and you want to make sure that if it's too challenging and too risky, you don't want to be there at all, because you don't want to lose your trading stake. On the other hand, if you can look at your clues that you can get from the indicators and find those opportunities, the indicators are going to be there. They're going to be there to point them out, and you can set up your strategies accordingly. So if there's no other questions, I do thank you for attending today's webinar, and I look forward to seeing you at webinars in the future. Darla, turning it back over to you.
Thank you, Darrell. The recording for this webcast will be posted on Trader Planet within the next 24 hours, and we will be emailing the link for the recording to each of you. If you are interested in seeking further information on Vantage Point intermarket analysis software, we urge you to contact our friends at Market Technologies, the makers of Vantage Point, via the screen. This concludes today's presentation. Thank you for attending, and all of us here at Trader Planet wish you a pleasant evening.